Hey guys, welcome back to the channel. Justin here with Breaking Bitcoin. I'm lucky enough to be able to sit down today with Brian Kerr from Kava Labs. Their project just IEO'd on Binance, so you've probably been hearing about them. And I'm grateful for this opportunity to bring this information to you and ask some questions about Kava. So Brian, thank you so much for taking the time.
Thank you, Justin.
Highly
Happy to be here.
appreciate it, my friend. How are you doing today?
Very busy here at SF Blockchain Week, but very happy to sit down and talk about DeFi, talk about what Kava is doing, and all the questions that you might have. I'm happy to just dig as light or as deep as we want to go today.
Great. Well, we're going to dig deep, man, if you got the time. So first off, just tell us what Kava Labs is about, how you guys came to be, and what problem you guys are trying to solve.
Yeah, so Kava is best described as a cross-chain DeFi platform. And by DeFi, we're offering stable coins and lending services to users of major cryptocurrencies like Bitcoin, XRP, Binance, and pretty much any other cryptocurrency that's a major cryptocurrency with lots of users, that's a high quality asset. We're extending all of the DeFi capabilities that ETH has had from things like Compound and Maker and everything that's been in the Ether ecosystem now to everything else.
Okay. So basically extending, again, as you just said in your own words, the abilities of Maker with DAI and collateralization and trading other coins, or having the ability to access liquidity is, I think, the main purpose here, is accessing liquidity in a decentralized manner, right?
Yeah, it's providing open access to loans in the form of a stable coin that they can use for whatever they want.
Great, great. Now, what is the stablecoin? You guys, is that what you guys have created? You guys have your own stablecoin, or you're piggybacking off of something like USDC, US dollar tether?
So we have a number of options. We're kicking off with our own stablecoin that's called USDX, and that's soft pegged to the US dollar. But our system is designed in a way where we can implement any new synthetic asset that we want. It could be even synthetic Bitcoin, synthetic Turkish lira, whatever our users demand over time. They can post up crypto as the collateral and then create whatever assets they want. But for today, and like the go-to-market that we're pursuing, it's all just USDX.
Okay. So can you walk me through, if I were to want to utilize Kava's project to access liquidity, like what would that look like for me as a customer?
Cool. So you have a ledger or something?
Mm-hmm. Yeah. I got it right over here.
So you plug in your ledger. You got some BTC.
I do
probably got some BTC.
I got a little bit.
Hopefully.
Yeah.
I mean, I'm a little biased. I think BTC is the one for me, for actually most people, I think. But it could be BTC, it could be Atom, whatever you want. Load it up. You have our CDP portal. You effectively just send that to the portal. It's escrowed in the smart contracts that run on Kava, and that just has some dollar value of BTC. So we use an Oracle system. It's basically a collection of price feeds from things like CoinMarketCap, exchanges, and that's all reported, and whatever the median price is, that's your effective price of that BTC. So let's say that's $100 of BTC that you've escrowed or locked up in the system. Then you just say how much you want to withdraw as a loan. It has to be under a certain debt to collateral ratio. But let's say for BTC, it's likely around 66% based on the risk of BTC. So you could withdraw up to $66 that then is issued to you in USDX straight to your wallet. You take that, you can put it on exchange, buy more BTC, get a levered position in BTC, or you can go and use it for payments or whatever the heck you want. Once you're done, you just send the USDX back to the system, repay the loan, and your collateral is released back to you.
Explain to me why that would be attractive to me. So I have to collateralize the money, very similar to Maker. And this is a concept that I've been talking about a lot with individuals at San Francisco Blockchain Week about DeFi, because me personally, I have always approached the space since 2016 as somewhat of a Bitcoin maximalist, right? Yeah. And the last year, I'd say, would be a journey toward kind of gaining a fuller understanding of all the projects that are in cryptocurrency right now. So, explain the ecosystem to me. If I want access to a traditional loan, I would go to a bank. I wouldn't put any margin or collateral up. I would simply ask for a loan, and based on my credit or based on who I am, that would either approve or disapprove that. But then I would just have the money. I didn't have the money previously, I have the money now, and I didn't have to sacrifice my money to get that. So what's the difference of, in this example, depositing $100 and getting $66? So why, is there a way that one can borrow more than they've collateralized?
Yes. But our first product that we're offering on the system is an over-collateralized loan.
Sure.
And that isn't just you only can get $66 of effectively margin to use. You actually can use that to buy more Bitcoin and then you can use that Bitcoin, put it back into the CDP system, get another loan, buy more Bitcoin, and you get the overall exposure to the total Bitcoin you purchased recursively like that, and you can get up to like 3x leverage, roughly.
Okay.
But to answer your question, while that's true for some types of credit, you need an identity. You need to have some party that's willing to give you that credit initially. And if it was a large amount, say hundreds of thousands of dollars, most people have to put up like their house as a reverse mortgage or something as collateral. Sure. So this is very similar to that construction. The house is always worth more than the loan they give out on it. Similar, your crypto is always going to be worth more in this setup than the loan that the system's going to give out. And it's just a way that we can do this all algorithmically without putting anything at risk in terms of like the system, the value of the USDX loan. It all is algorithmically stable because it's over collateralized. In the future, there is a possibility to take something like USDX, take the oracles that we're building, and then use the price feeds from the oracles to allow two parties to bet on each other based on the price feeds. So if you put up $100, I put up $100, and we bet on a 4x sort of delta of BTC price from when we started to when we close, then we can get it could be 4x, it could be even 100x, and we can have a 100x leverage trade between ourselves using what we've built. And that's a product that is sort of off in the future. I'd say 6 to 12 months out for us, but that is something that once we build these first primitives, we can expand into.
So that makes a little bit more sense to me, or at least in understanding DeFi, in the sense with the Bitcoin example. I've purchased Bitcoin, meaning I've already moved from USD into Bitcoin. And now I can gain more Bitcoin to do what I want, or USDX in this example, to get more exposure to Bitcoin by buying more and essentially getting leverage, or to hedge, or to do something else. Now, in this example, am I actually sending my BTC to another Bitcoin address, i.e. I've lost custody over that BTC temporarily?
Right. So that is the core issue for most BTC guys. Don't give up my private keys, right? And I think one of the major experiments that DeFi is trying to do right now is say, with a number of different solutions, can we create a peg of BTC, because BTC doesn't have smart contracts, where it's decentralized enough that the real BTC maximalists don't feel like they're sacrificing anything. So there's a number of constructions like TBTC produced by Keep, which is a peg of BTC that's being built on Ethereum and Cosmos. And then on the other side of the spectrum, you have fully centralized custodial BTC pegs like Wrap BTC, or in Binance's case, they have BTCB, which is you send BTC to Binance, you already trust them. They say, here's some BTCB, which you can use on the Binance DEX. Right. So in our case, BTC actually will have a number of different ways. One of the first bridges we're building is to Binance itself, to pull in BNB as collateral to our system, and also BTCB and other Binance DEX assets. So in the short term, that centralized solution would be how people get leverage on BTC specifically for us. But in the long term, if Schnorr's signatures get passed for BTC, it means that you can effectively have like a multi-sig where a number of nodes, 100 plus, control kind of that one address that you send your BTC to. So collectively, it's still decentralized in control, and they're just running the platform of when BTC's taken, put in escrow, or released back. So in that way, I think the experiment that'll happen in the space is, will the BTC maximalists feel that's decentralized enough and trust giving away their private keys to get long-term exposure or leverage exposure, hedging exposure to BTC?
Well, the interesting thing about it is essentially, going back to that example, I've transferred from dollars into Bitcoin, and I now have Bitcoin in my private wallet. I want to gain access to more leverage, or I just want to hedge, or I want to buy something else, or I just want access to purchase groceries, right? Let's talk about real world use cases, right? I've bought $100, it's sitting in my wallet. I view that though as an investment, or I'm holding Bitcoin, but I need access to something that I can use liquidly right now. So I send the $100 right now to a portal, for you guys, which in essence the portal takes custody of the coins. And I have now my $66. I simply repay it back with the fee. What's the fee look like?
So that's a variable fee based on, it's basically market dynamics, but it should be in the range of something between 5 to 20% based on a number of different factors. But the primary factor is the volatility risk of that particular asset. So we call it like a stability fee that has to be repaid. And that's repaid not in USDX, but it's priced in USDX in our Kava token which is the governance and staking token of our platform.
So 2 separate tokens, the USDX, which is the stablecoin alternative to US dollar tether, USDC.
Yeah.
And then the Kava, which is the governance and staking token,
Yeah.
right? And which one was IEO'd on Binance? The Kava, the staking.
Yeah,
and
the staking and
token,
governance
right?
token. Right.
Okay. Well, let's talk about that real quick. So, what is the incentive for an individual to hold or stake the Kava token?
So personally, I think my incentive is I want to have a share of this decentralized central bank that gets to control interest rates and the money that's being printed off of all these crypto reserve assets. So whether it's BTC or BNB, whatever's going into this is effectively a reserve asset that then all these US dollars are being minted off of. Because the USDX, right now, there's 0 USDX in the world, but the moment someone takes a loan out, the software just prints USDX out of thin air, right? So it's like there's no counterparty there. It's just the software issuing you that loan, and then when you repay it, it just gets destroyed, right? So in that way, it's like quite novel. So on the personal level, I think it's it's like me owning part of the Fed. It's like just a really cool thing that I get to place my vote of what parameters I want, what collateral I want to have supported here. Maybe I want renminbi tokens, like who knows, right? Like if that's my thing and I want to vote for it, then we do that. So on the personal level, there's that. On the incentives, like financially, how it's structured is that anyone who is staking this token receives inflationary rewards, and everyone who is not staking this token effectively gets taxed. So it's almost like a tax on speculation.
Right.
And that varies between 3 and 20%. If there's a lot of people staking, we lower that down to 3% because the system's very secure at that point. If there's not so much staking, it goes up to a 20% interest reward or APR.
To incentivize people to
exactly.
stake. Right.
Yeah.
And that's for people using the USDX. Are you saying they're paying a higher fee for the loan, or how does that interest rate affect people obviously on their borrowing and saving, the fee that they're paying to
So
get the
that's
money?
irrespective to USDX. That is solely for the Kava token.
Okay.
So when we say the total Kava in the network is 100 million today, if that's starting to get down towards like 50%, we want to hike up the interest rate so more people are going to hold it and stake it.
Okay.
And that's on the inflationary side. And like a federal bank or central bank, we have a number of different levers that this system uses Kava for. And the second one is anytime someone pays back their loan and they pay that little fee in Kava, that is 100% burned. So there's this deflationary mechanism as well in our system. So we both have inflation rewards and deflation in total supply as the system's used more and more.
And you have something that our modern alternatives do not. So specifically, I'm talking about US dollar tether being the most popular and liquid stablecoin out there. There's no accountability. So with Kava, I'm assuming, would I be able to go in and see all the collateralized assets and be able to verify that their existence is there, and therefore see also how many USDX tokens are available, so that we don't get fractional reserve lending practices, essentially. Which is what we're talking about, essentially.
Yeah.
But not. No, this is not fractional reserve. This is over collateralized,
Right,
as you said.
right.
So there's more than enough collateral there. There's no issuance of fiat, essentially, in this case. Well, not fiat, but what's the correct term I should use for this?
For the
USDX to be issued.
Oh, it's just a stablecoin.
Yeah, their assets being issued off of a reserve asset.
Yeah.
Right?
Yeah.
But is there a way to verify that there is reserve for every USDX or stablecoin or asset issued off of these reserves in existence?
So we've already had our community make like 4 different block explorers. These will not only just show transactions that are happening, but there's CDP explorers as well. So you can see exactly what assets are collateralized, how much USDX has been issued. One of the key voting parameters is how much can the system mint out of thin air. You don't want to grow too fast, but you want to have it steadily grow to support the user base. But it's all 100% visible on the blockchain.
Good. I mean, the accountability is a very important thing, and I think that's the biggest issue we've had with US dollar tether.
I would say just the US dollar system, period. If you look at any financial crisis, it's because there's a panic sell and big issues happen because there's so much leveraged credit in the world that then snowballs down. And here, if we're always over collateralized, there's absolutely no risk of that, especially when the sell-offs and the liquidations are actually happening on-chain algorithmically, right? It always, if there's $100 in BTC in the case we gave before, and that value of BTC drops, that BTC will be liquidated before it ever reaches that $66 value of the loan itself.
You're right.
Yeah.
So I think that is, in my opinion, one of the biggest problems of the world right now. It seems if you look around at traditional finance right now, if you look at banks and lenders and credit cards, and the conversation in America, especially right now, is, we're so much in debt. If all of our debts were to be called, there's just not enough money. And that's the basis of the dollar. If all debts were to be paid, there wouldn't be a single dollar in issuance. But that's not actually the case. There's more outstanding debt than assets to cover the debt, right?
Yeah.
And what we've been talking about lately is the overnight lending market, the repo market, and how they're now playing this game of musical chairs, where the first bank that was worried about that had a cash crunch went boldly to the Fed. I mean, that was what initiated the 2008 financial crisis. Was that almost exact same thing happening, right? In the collateralized debt obligations market, but not in the overnight lending market, but still in a financial market, and a bank felt a cash crunch. And this happened for months, where they were terrified to approach the Fed. And then the moment one did, financial crisis. Lehman Brothers goes bankrupt, or does bankruptcy, and that's kind of what we're tiptoeing around right now, honestly, with the overnight repo market. Now the Fed has ramped up quantitative easing. So I said all that to say the danger exists when you are extending an infinite amount of credit on top of an ever dwindling amount of actual assets in reserve. We're not backed up by gold anymore in the case of the US dollar. And the dollar is now being talked about in the news as, people are starting to significantly question whether the dollar should be the reserve currency in the world.
Right. And we have countries now, or I shouldn't say countries, but places like Hong Kong that are just incredibly leveraged, and they have their own currency, even more than the US dollar.
Right.
And they have so much geographical influence that we can have a crisis just like that over and over again. It happened in Greece. It can happen, in Hong Kong. Seems like a very likely candidate. It was the biggest, I think it was what the IMF pointed out as one of the most critical factors, is Hong Kong was one of the most at-risk regions just because they were so leveraged up. And this is something that crypto, and really not crypto, but blockchain technology, can come in and solve, because it has this sort of cascading settlement that can just be programmatically done.
And that you think is that the revolution of cryptocurrency? Is that we can actually operate these systems that we've tried that have been based on trust in a way that you can just go in and verify that there is actually assets backing things up, that things are being done correctly, right?
Well, there's always a risk that things are programmed wrong. We design a system that it can be under collateralized, something can happen there, or even the underlying blockchain assets could fail, right? That is always a possibility. I think what blockchain really provides is a way to provide open access that's just not on a country by country basis, but to anyone regardless of their identity, their credit score, what have you, and then solve a lot of the current trust issues, which are trust between financial institutions, which people perceive to be safe, but then with things like the 2008 financial crisis, like you mentioned, they're obviously not, right? And there can be events that will happen in the future that won't be like 2008, where the Fed can bail it out through quantitative easing, but instead, sometimes federal governments won't be able to bail out. They don't have the actual reserve assets, or people will lose faith in the dollars or whatever currencies they're printing, and that just won't work anymore. And I think we're at a special point in time in the macro landscape where that just feels like more and more, not it will happen, but there's a higher potential that it could happen.
Absolutely. And we're kind of lucky to live in this era where cryptocurrencies being a relatively new technology, it's bringing people from the world of economics, the world of development, the world of venture capital, the world of human rights, the world, and honestly the realm of politics too as well, and it's all its good and bad aspects, into this, realm where we're trying to figure all this out. So very strange bedfellows, and but it's all because of this umbrella of this new technology, and it's pretty interesting, man. The way I've always framed it, because again, what gave me the Bitcoin bug, what sent me down the rabbit hole and gave me the red pill, was me looking at this concept and understanding that, wow, this is a way to remove a government totalitarianism, or highly prevent against that, and prevent against government control of money and centralization of power, which I've always been strongly against. So
our team at Kava, we come from a very different set of backgrounds. But as you said, just sort of everyone comes from different industries into this through different lenses, ends up at the same spot. But two of my co-founders were in professional poker before. They were professional poker players. And that whole thing just got 100% regulated in. Their funds got seized straight from the banks because they were playing on online poker websites. And when regulation changed, all of the funds of those poker websites got froze, which meant that their bankrolls got froze. And they didn't have access to that for years. And that during that time, all these people sort of either fled the country, fled to different jurisdictions, or they went to assets like BTC and just tried to get around it the best they could. And then on the flip side, like I come from gaming, where I come from the esports background. My last company was Fnatic, which is one of the world's largest esports teams. And digital native currencies are just sort of the norm, like World of Warcraft gold or whatever it is.
Right.
It's just what you're used to. So in that realm, like, so of course crypto makes sense. Like everything's always just been a, some image on a screen or a number, in a ledger somewhere.
Yeah.
That makes sense to me. I want to, buy Starbucks coffee with my World of Warcraft gold if I could, right?
Yeah.
Like, why can't these things mesh and be interoperable?
Yeah.
And that was sort of my way in. For them, it was the poker side. And then on the other side of our team was actual distributed systems experts coming out, saying, hey, I've been looking at sort of what is a distributed database, and let's apply this to real world problems.
Yeah.
And then of course there's the financial guys. They've seen a bunch of different things and been paying attention to all the both historic issues, and then they sort of can see in the macro landscape where crypto can fit in pretty nicely as well.
It is.
So
it's pretty fascinating to actually be here at San Francisco Blockchain Week and just walk around and see, I mean, how much venture capital is here, and
right.
And so for people who are on the sidelines who think that crypto is a fad, they have no idea. They need to come here and see how much is being built. And what's really interesting is seeing actually projects that either raised funds like a couple of years ago or last year. They're actually beginning to bring products to market now, which is pretty interesting, because the last year or so it's been kind of rough. For cryptocurrency veterans, and a lot of new people who came into cryptocurrency in 2017. A lot of new retail came in 2017, and 2018 was mostly depressing. Right?
Yeah.
And at the same time, you also had, I think a big part of that was, there was the sentiment that the market ran up and now it's coming down. We had all these ICOs come in and now they're largely exit scamming and they don't have any products. But what's interesting is now prices have gone back up, relatively higher. And now a lot of products are coming to market.
Right.
And so a lot of that faith is coming back. A lot of faith is being restored. And to come out here in person and see it, to see all the development being done, it's pretty inspiring. If you come here and you walk away still not sure that cryptocurrency is going to be the future, I don't know what to tell you, man. Like, you're looking in the wrong place.
The nature of the attendance, like the people actually at the conference, is so different than it was a year ago or 2 years ago. 2 years ago, CSC was a small little, sort of nerdy conference of cryptographers over in Berkeley.
Sure.
And then it combined with SF Blockchain Week, and the next year it was sort of ICO mania, and everyone's just trying to hustle around shopping, shilling their own project. And then now I think we finally reached a thing where the culling has happened. A lot of sort of the fluff has been removed, and now you have the serious cryptographers that are doing really good work. You actually have products that have real use cases, and everyone's pretty well positioned, I think, going forward to actually be successful. And kind of to your point, products actually coming to market. One of the things, though, of sort of the past year is similar to, I think, the dot-com boom, where everybody was making an internet company and everyone had a ton of money, and then like just overnight, many of them just flew away, and only sort of out of the ashes came Google and Amazon and these others. One of our good investors and shareholders said to me just the other day, he was like, he lived through all that, and he said that a key indicator of things that have outsized potential is the ones who can live through that period, because they go through all the learnings, and then if they can actually survive and come out the other side, those aren't just like normally regular companies that are going to do well, but they actually have almost like they'll exceed your expectations just because they've gone through that. Yeah. And that's like, actually I think Kraken's a great example of that. It went through sort of the early Bitcoin crashes and a lot of the issues that happened there, and it survived. And now it's like one of the world's leading exchanges and has grown so much since.
They have. That's the same way that I look for team members, that I look for friends, is looking for people who have the grit and tenacity to make it through. I kind of talk about that quite a lot. And you can see it with development projects. You can see it with individual people as well. That's definitely an important part. So going back to the original concept of actually utilizing Kava and getting USDX, and I just want to hammer this point because again, the entire concept of DeFi is fairly new to me, and this is kind of has been a great experience for me on understanding projects outside of Bitcoin for either long-term holding purposes or their fundamental value purpose. Because again, kind of coming from the realm of a Bitcoin maximalist, and because that's what's always made sense to me. I thought the biggest issue was always disempowering and disenfranchising the government from their authority over money. I think that's the biggest issue.
Right.
So I always kind of had this concept like, well, why worry about these other things? Like, can we like do mission 1 first and then we'll branch out? Like, you need Batman to be strong before you try to train Robin. Come on, man. But what I think is interesting about this is that you're talking about the ability for one to get a loan with no paper signed, no identity requirement. This is an anonymous, decentralized loan to as great ability as we can make it, right? So I purchase BTC. I purchase that BTC anonymously via local Bitcoins if I want to. I send it to your portal, and I now get access to leverage, which once I pay back, I get my Bitcoin back.
Yeah.
And you're talking about in the future, the goal for Kava is to make it in such a way that I send the BTC, I don't lose custody over it. It's done through a Schnorr signature.
So you still are giving your BTC to some other address, but it's controlled by a very decentralized group of actors that would need a huge, basically like even if they collude, they have more at stake to lose if they collude. And that's sort of like the beauty of having all of these validators, we call them. They actually post up a lot of collateral on their own. They have slashing conditions where they lose collateral if they're caught being bad actors. And we chose validators that are what we call like very high quality validators, where they have high uptime. They know what they're doing in terms of they have like physical servers set up around the world. And they validate not just like Atom or Tezos or one blockchain. They actually validate all of those. And they get delegations from people to do that. And why that's important is if they do any like bad acting on our blockchain or on Tezos, they lose their reputation as an individual according to like their brand name, that everyone will remove their delegation from them and they'll lose all that revenue that they're getting from sort of the interest rates and staking that they're doing.
So you're creating the system in such a way that disincentivizes individuals to collude.
Yes, and what's important is it's not like our system could only support how much BTC was in there, and if the amount of BTC that was in our system was worth more than our system itself, then it would be, oh, let's collude and do that, right?
Sure.
That would be a great reason. So we needed to get sort of these 100 plus decentralized groups of actors to have way more at stake than just the assets of Kava that they're holding.
Sure. So I like the idea of being able to access margin with no identity. I like the
I love that too.
I like the
what I also like is going onto an exchange and not having to go through a KYC process, right? And like that was sort of the beauty of a DEX, although DEX assets are kind of crappy today. But I think that's because the on-ramps into them are not so great, and ETH assets aren't so great. But if you can expand that to a much broader set of currencies, then it can be really interesting.
Sure. Now, I mean, how is that germane to Kava though? Because you talked about avoiding a KYC AML process. And again, that's, for a lot of people, they can't even buy Bitcoin without going through a KYC AML process. So, is there a point there that I'm missing?
Well, sure. If you do work for someone and they pay you in Bitcoin, you don't really need to go through a KYC process.
Sure.
Or if you're doing local Bitcoin or whatever you want to do, as long as you have some way to access crypto, once you're in sort of the landscape, then it's completely up to you what you want to do. And the ideal goal, I think, for most Bitcoin maximalists is to never leave that ecosystem.
Right.
Don't pull it out. Don't have to pay taxes on those things. Like, don't have any of that happen to you. Instead, just live within the crypto landscape. And with something like holding BTC, getting a loan in a stable coin, then being able to use that on, say, a number of DEXs like Binance DEX to do trading and other things, you never have to go through that KYC process. You never have to give away your identity or your data, for that matter.
So what you're talking about is entering the ecosystem of cryptocurrency, holding cryptocurrency, and again, just utilizing Kava Labs or the USDX stablecoin when you want to get access to margin or you want to do something else, and trading on DEXs and not having to go to these exchanges. Because if you can avoid that main part, because you can acquire your tokens on these decentralized exchanges. You don't have to go to the centralized exchanges. The only fly in the ointment is they're acquiring the BTC in the first place.
Well, I guess you can always just mine it and receive it directly, right?
Yeah.
That's an option as well. I think the other part that we haven't talked about so far is the stable coins or the synthetic assets that we make, they also can be staked. So they have an inherent sort of bonding ability where you can just take effectively a US dollar and create a bond out of that, where you're receiving a return over some period of time.
Okay.
And basically what we do to incentivize demand of USDX over something like Tether or USDC or any of the other options today. Not only is it decentralized and it's not through one custodial service that could be shut down, like Tether's having a ton of issues.
It is.
Like USDC has strict regulations, so it doesn't have issues. But something like what we're building, it's completely off, like no government can stop it. They would have to, shut down so many different actors around the world just to do that. But what we can create is something like USDX where you can bond it, receive 2, 3, 5%, up to 10% interest rate per year based on market dynamics. And how we do that is every USDX, as you remember, has a loan or it's a stability fee behind it that needs to be repaid for that collateral behind it to be released. So we take part of that stability fee and we just return it to the USDX holders rather than burning it. And in that way, we can create the savings rate of the stablecoins themselves. And while that's like really cool for USDX, if you compare it to savings accounts in banks today, so it's actually like for me better to hold, if I'm just trying to save USD, I just hold a bunch of USDX and save it rather than put all my USD into a bank account. But with assets like Turkish lira or something else, they actually have negative yielding bonds or negative interest rates in many countries around the world. So we could create those synthetic assets that actually peg to that in terms of the fiat value. But then instead of having a negative interest of users, if they're holding our pegged version, they actually have a positive interest rate. So it creates a really, really nice alternative where it's still exactly the value of the real world assets, but they have the ability to save and earn a return on it over time.
So you were essentially saying that if I took a USDX loan and I owe 5% back when I return it, and that fee is paid in Kava, right?
Yeah.
So I would have to use separate money to buy Kava to repay back the loan, or hold Kava because you guys are incentivizing holding Kava, right? Yeah. You're saying
it's still priced though in the USD.
It's still priced in the USD. Yeah. Okay. So my question here is the fee that is owed to pay back the USDX loan. You guys would just reduce a portion of that and pay that back out. You would have to mint USDX, however, to do that?
Yeah, it's all done through an auction mechanism. It's kind of like a three-way auction and price dynamic that's going on here for stability. Basically, we would take the Kava that's being paid back, and then we could sell that back onto the market, or we could either reduce the USDX or buy more USDX, depending on what balance needs to happen. But effectively, we're just reapportioning some part of that and putting it to the savings rate of the USDX holders themselves. And you can also just imagine, because we're still burning it, at the same time we can mint USDX, right? Sort of one for one in dollar value that we're receiving from the loan or whoever's paying that fee. At that same time, we just print that same value of USDX and give it to people as a reward.
Okay. So you really are looking to take basically the financial structures that we have right now, the stability that our leaders tell us that they provide us, and making it actually programmatically verifiable.
Yes, and giving them a way that they're not just going to get inflated away over time.
Yeah.
Right.
Well, that's the big concern in everybody's mind. People talk about the stability of the United States dollar, but if you look over the long term, I mean, it's devalued 94%. It's worse than an altcoin chart. I mean, it's absolutely terrible. I mean, that thing looks like it was listed on...
Are they pump and dumping us?
Right.
I don't know.
It looks like something listed on KuCoin. And
who are those market makers? I don't know.
They're making it to the downside. So and that's what's on everybody's mind right now. And you talked about negative interest rates and the ability. I mean, I think that's pretty revolutionary for a lot of people. Like even people who have been in crypto for a while. Like that's still pretty revolutionary for me. The fact that I can hold some synthetic USD and earn interest on that, and beat my savings just holding it anywhere else. Right?
Yeah.
And be part of the decentralized economy.
There are some technical difficulties that are currently being worked on that combine this idea of staking an asset, but then also being able to use it in something like Compound or any of these other DeFi protocols where you're actually lending it out.
Right.
Because if you stake it on our blockchain, you have to lock it up and put it there. You don't have the ability to move it around anymore. Give it to someone else to use. But there's actually a number of solutions that are coming out that will allow any of these staking assets to then, as you're staking it, as you're securing a network, effectively still loan it out to other people to use and trade, place bets on.
Sure.
So I think that's going to be a really cool thing that's coming out in maybe the next 6 to 12 months as well.
Are you concerned at all that what we're talking about here is awesome, fantastic ideas and possibilities. And it's exactly what we have in the world now to a large degree, which provides a lot of jobs for people, provides a lot of opportunities for individuals, provides liquidity for all kinds of things. And you need capital and liquidity to get things done in this world. Are you concerned, though, maybe from a philosophical standpoint, that you look at the economy that we've built, and there is a large sentiment around there, especially with cryptocurrency people or advocates of cryptocurrency, that this financial complexity of collateralization and loaning and loans and this and that, that's inherently a structure that doesn't work, that it's inherently a kind of, I don't know, what's the word I'm looking for? It's inherently a structure that takes advantage of people, or always inflates to a level where it just falls apart. Because once you open up the doors to more and more complexity, taking loan money, switching it around, borrowing it to get something else, lending it back over here. Yeah. Once you get to 6 or 7 degrees of moving away from the original source of the money, do problems inherently crop up, in the economy.
So you're asking me specifically about our current financial system, right?
Yeah.
Yeah. I don't have a particular view one way or the other on what the financial system does. I think it does a lot very well, but as you mentioned, it benefits a very select few. So the distribution of wealth and just sort of its natural dynamics tend to take away from people who don't have a lot of assets to begin with and reapportion them to sort of the people who already do have a lot of assets. So like a clear example is, who makes money off of inflation is actually a really good question. It's been a Twitter debate. There's all sorts of things going on there. But similarly, our current system enables very rich people to hold equities, to hold things that have effectively a good store of value in proportion to inflation, whereas poor people have to continually work to earn money, and they don't have any ability to save, so they're stuck in this sort of cycle. And all the while, the rich people, their assets that they're able to buy with their excess income or whatever they have, that just keeps growing and growing in dollar value. So they get to ride that nice wave, where everyone who's on the bottom doesn't. And I think it's creating a really bad dynamic overall.
I agree with you. The other problem that we're having now with the United States talking about lowering the interest rate, and as the concerns of everything that's happening right now increase, you're seeing individuals move into riskier and riskier assets just to maintain yield. So you're seeing individuals that were holding bonds move into low-risk stocks. You're seeing individuals that were holding low-risk stocks move into medium-risk stocks, and on and on and on. And the capital just continues to flow. And where it usually ends up, historically, in these cycles, is the equities market.
Right.
What happens after that is that some portion of the market balloons up because too much money flows there, and it becomes overvalued way too quickly, and then we generally have either a depression, that's the word everybody uses, or a recession, or some sort of financial crisis. And what concerns me now is the overnight lending market, is this game of musical chairs that's currently being played.
It's very interesting because you have this overnight lending market, but at the same time, all the banks are shareholders in all the other banks, and they're just deeply intertwined, yet they're still doing these sort of back and forth deals to say, oh, you got some cash over there, give me your cash. Yeah. And so there's the overnight lending market, there's like the repo market, but then there's also the reverse repo market, which is also interesting. Yeah. And all of them kind of just really intertwine all of these things as all for like the goal of just getting higher returns, right? And increasing their own performance. It's very hard from the outside looking in. I'm a crypto guy. I'm just like sort of building all day, trying to do this weird open decentralized finance thing. Where on the finance side, I think just the number of concerns, if I was over there, I think I would be quite worried. But one of my first forays into crypto was going to a SWIFT conference, which is a coalition of 10,000 bankers. Sure. So it was me in my normal clothes and just a bunch of like penguin suits walking around. And what was so interesting to me was I could, at that moment in time, it was like 2017, I could have easily foreseen sort of in some amount of time, correspondent banking was going to go away. A lot of these relationships were just going to go away because they don't make sense. They're just weird middlemen that are put in place that things like crypto should obviously solve. But now fast forward, 2-3 years, I don't think crypto has actually solved any of that. And it does make me a bit more skeptical on just sort of how much power influence something like crypto could have versus dollar hegemony and the current financial system. What's really exciting to me though is now with like President Xi announcing all of his sort of like blockchain initiatives in China, it creates this really weird third-party dynamic where it's not just renminbi against the USD for hegemony. I think the third-party candidate is crypto, But similar to U.S. politics, where it's third party, I might run a campaign with no intent of actually winning, but my job is to take away votes from you, right? And I think that might be a dynamic that we see play out in the next 2 or 3 years as China gets stronger and stronger with their RMB, and it's competing with US dollar for sort of the global currency, all while crypto is sort of doing the same thing. And China and crypto will feed off of each other, and I think make the US dollar much weaker than it would have been if it was just 1-to-1, or one versus the other.
That's an interesting take. The way that I've always looked at the future, what I feel is coming, and kind of the battle for fiat hegemony over the world right now, is we see central banks around the world talking about digitizing their own assets because they want to eliminate cash, of course.
Right.
They want to get rid of cash. Cash facilitates illegal transactions. Cash is, very hard to confiscate. It's a pain in the butt.
It's hard to tax too.
It's hard to tax, right? And this is why it's taken 5 years. That's why it took 5 years for the IRS to make their first guidance on cryptocurrency.
Also, let's not forget that cash is a way to store value, where you can have negative interest rates applied to everyone if everyone is in a digital system.
Yeah.
Right. So I could have $100 if my country is negative interest rates, all of a sudden I'm just forced to have $99 the next year. Right. Like that's just a horrible system for everybody.
It is.
But that's what a cashless system would look like.
Well, and that's why they want to move us toward that.
Yeah.
And I think that it's my personal opinion that potentially for that reason, the governments around the world didn't take strong action against Bitcoin when they should have, if their goal was to eliminate threats, right? I think they wanted to co-opt the technology as a possibility, right? But now they've let the Bitcoin network grow to be so strong and decentralized that it's I think at this point, impossible to put the genie back in the bottle. And you have so many people developing, so many people building, and now it's to the point where nation states are interested in this technology. And who's going to be the nation state that steps up to have Bitcoin's back, or this entire economy's back, should the United States or should the Eurozone or anything like that want to say, you know what, we're done with this crypto thing. It's illegal. If you do it, you're going to be in trouble. And then China steps up and it's like, okay, we got this.
Right.
Yeah, Bitcoin, come to China. And I think that's a big concern for the United States. But although we could talk about, and I thank you for pointing that out, I think that we do have some looming, I don't know, war, but just economic conflict, which we already have with China, and talking about the United States. But what I focus on is central banks around the world wanting to digitize their own assets, and corporate coins. So things like Libra.
Corporate coins,
corporate coins, things like Libra. And I think that the convenience of a corporate coin, let's talk about a Facebook coin or Twitter coin or whatever have you, that is going to onboard so many people into the realm of digital money that don't understand that they're already participating in digital money by swiping their card.
Well, it's PayPal. I don't know.
Right, Venmo, Stripe, man. And when you're onboarding that many people and they're using corporate coins, you're going to get to a point where, with billions of people around the world using corporate coins instead of sovereign currency, governments are going to feel threatened. But I think that the issue right now is people ask, is Libra going to launch? Is Libra not going to launch? Is it going to pass regulation? It depends on how much it's going to toe the line. It's in a Silicon Valley state. It's in a regulatory state. If the government decides that we can benefit from this, it'll be approved. If they decide that they can't, then it won't. But even if they approve corporate coins and they're wildly successful, eventually the government will come in and try to replace that with government-issued digital assets. They want the economic hegemony. They want the economic hegemony.
You look at China right now, and they're creating their own digital asset, but they've always had, much farther along than the U.S., a payment system based on WePay, Alipay, and that's just your corporate coins tied to bank accounts that they can pull out. But really, it's the corporations holding all that money anyway. They get to have sort of any interest rates. They get to put in money market accounts, whatever they want. But it's always lived in those corporations themselves. And I think the U.S. is finally realizing, like, oh shoot, we got to catch up to this.
Okay.
And Libra is maybe one of the only solutions that's very exciting, but also just incredibly risky, because the U.S. has the most to lose as the current leader in the space.
Can you break that down a little bit more? So just talk about that for a second. You're talking about China's model of having corporations basically control its liquidity. Am I understanding you right?
So it's not. So China's creating their own digital asset, right?
Right. Yeah.
That's their plan. And then they just get to mint that and issue it to whoever they want.
A commercial
banks,
right?
But it's the corporations that actually have the endpoints to the end users. It's not the government in China is not trying to give their their coin or their token to each individual.
There's not going to be
they view that as like Tencent and Alibaba.
Like, come on in.
Right, but they're not going to be the mobile app, right? They're not going to be where people are actually transacting payments. The actual payments are going to be happening in the corporate apps.
Yeah.
And because of that, it means the corporate apps should be holding most of these digital tokens, or basically being the middlemen where they're having a lot of the data and the responsibilities. It's really just sort of on the sovereign side, they're just minting some amount of money and controlling the supply to the corporations.
Central bank, the way that I had read the paper, or the way that I understand it, is the central bank will be minting the digital assets, distributing them to the commercial banks, and the commercial banks are responsible for getting them to the vendors. Right. Yeah. And you have, again, where's that money flowing from? It's flowing to Alipay, to WeChat. Yes.
Yeah, I mean, we pay with, what is it, like 90+% penetration in China.
Yeah.
It's like, it's an incredible business model, especially to have that type of support and to be kind of anointed by the government, like you're our payment thing. Like there's Alipay and then there's you and that's it, right? Like there's nothing like that in the US. And I think Facebook's goal, or Libra's goal, was we need to have something like that. And there seems to be a business opportunity for all of them because they have a bunch of customers as well. And Libra was a way to actually sort of take steps in that direction without being banks themselves. But then when the Congress found out, they're like, whoa, stop this. We have the most valuable sort of reserve asset in the world. Let's not mess that up. We have a lot to lose. Let's pause this. But then the risk for the US is that as it's paused, China's racing ahead, right? And I think the next few years we'll see sort of which racehorse is faster.
Yeah.
We're in the lead today, but maybe not for long. Who knows?
What do you think is the most likely outcome of what's going on right now with Libra, with America and China? What do you see happening in the next 5 to 10 years?
I'm not going to be Nostradamus or predict the future. But what I will say is that this initiative from China, they might not have anything backing it. But what is very clear is they're now going to approve media to talk about crypto much more. Before, crypto had no exposure in mainstream media, really. And now that media is empowered to do that, and they're going to interview hedge fund managers, VCs, projects, have these public chains, like I think they're already putting out content educating retail people about Ethereum, about Bitcoin. So what that will result in is just a much larger retail user base that knows and can be exposed to crypto. So in that way, I think all of crypto should get a very nice balloon. So we might have thought, the biggest on-ramp is going to be Libra, right? With this new Facebook initiative, but really it might be the biggest on-ramp is what's happening over in China.
Yeah.
And if you're holding Bitcoin or whatever, you can benefit from it.
So you're talking about with the issuance of the digital renminbi?
Well, and just the sponsorship of blockchain technology officially by sort of the CCP.
Announcement that they made last week. Yeah. So Brian, we were talking earlier about the bearish state of the crypto markets over the last year and what that kind of meant for just about everybody in the space psychologically. Where do you feel we're at now? Do you feel we've changed? And what do you kind of think is on the horizon? What are we looking at here?
Yeah, I think we went through a number of cycles of many projects that people thought were really promising. I don't want to call out any one in particular, but I think projects like Perlin, people thought were going to be huge hits, ended up not being true, ended up actually being quite the opposite.
Yeah.
And one part is kind of how they were structured. A lot of private sale investors sort of were able to release tokens on the market very quickly, and that wasn't good. But on the other side, it was just sort of the market was a bit depressed. People weren't as positive. The volatility wasn't going so much. Bitcoin was sort of consolidating over time. And I think we're at this weird inflection point, whether it's because of the news, whether it's just because we've actually sort of are in the approach to another halving of Bitcoin and things are going to get priced in a bit more.
Yeah.
I think for Kava, we got pretty lucky because going into when we conducted our IEO, Bitcoin just went down 5% and the market was looking really bad. I was like, ooh, you sort of dice roll anytime you do one of these like launches and it's only one day long or whatever. So I really felt like we dice rolled and we might have like struck out. But right at the same day, sort of China did their announcement. A number of like positive things sort of hit the market, and Bitcoin swung up 30%.
Yeah,
right?
42%. 42%.
From the swing. Sorry, it was one of the biggest swings in like I think it was the top three. Yeah,
it was the third biggest swing in Bitcoin's history. Yeah.
So I don't know if that signals anything. I think that we are in a state where traders are getting a lot more excited, and I think that's just good overall for the ecosystem. many more retail folks are going to flood in from China's side. If Libra ever kicks off, more retail will come in here. So I think overall, like, I'm pretty bullish on crypto, and I think I'm more bullish on BTC than ever. But I think on the market side, what we really just have to look for is, like, is volume sustaining across all the exchanges, and pay attention to sort of what is the altcoin market looking like? Is it correlating with it? Is it sort of dropping off and Bitcoin's just trailing away? I think it'll be sort of key indicators of what is the health going forward.
Do you think the market will be healthier if you see Bitcoin trending and leaving altcoins behind, or do you want to see altcoins kind of following with it as well?
What I personally would love to see is Bitcoin trending and just taking off and leaving everyone in the dust.
Yeah.
I'm a Bitcoin maximalist, so like that's my thing.
Okay.
It doesn't help, or it doesn't hurt that the only blockchain that I really got involved with, Kava, is a way to leverage Bitcoin, right?
Yeah.
So it fits us pretty well. But I think that what I would like to see is 1 or 2, maybe 5 key projects that are really doing novel things take off and ride that wave as well.
And follow Bitcoin behind.
But with actual utility to Bitcoin.
Sure.
Yeah, I think that's really the most healthy outcome. Most altcoins don't have good use cases today anyway.
Yeah.
So it's like, let things be what they should be valued at.
Sure. So we talked also about one of the reasons for the depression of 2018. I think a big part of that was a feeling that, we had a lot of ICO projects that did fundraising, public token sales, and a lot of those ended up being scams. And although, I say that, but I do want to kind of walk that back. It's not that so many were scams, because there were scams, of course. Anytime there's money sloshing around, there's going to be scams. It's that just not a lot came out of that. As I said, it is interesting now to see products coming to market from some projects that actually followed through and put that money to good use. So, based on that, obviously we've had this IEO model over the last year or so. Why did you guys at Kava decide to go with the IEO model? Did you guys have any worries or concerns about kind of the idea about that, or why was that the right fit for Kava?
Yeah, I think for us, we already had a number of private investors. We had good partners, like Ripple's one of our investors. We're official partner of Cosmos. We had a really good ecosystem built, and we had a good community of technical people to be the validators and actually kick off our network. But what we needed was really a voice box, or I guess a soapbox is a better term, to amplify what we were doing and reach a bunch of retail users, because our core audience is traders and crypto investors, right? So the best place to do that is someplace like Binance. So for us, it was really just like a marketing and distribution activity, not a fundraising activity.
Sure.
Where in 2018, everyone was just trying to raise as much money as they could, which is also why we did, in sort of the grand scheme of things, one of the smallest IEOs, I think, ever. We only released, we conducted, it was roughly around $3 million. And it was really just, we wanted to raise awareness. We wanted to get people aware of what we're doing, and then position ourselves very well for once we launch our CDP platform, they'll be ready to be meaningfully involved.
Sure. I would assume that's the mode that Kava is in as well right now, distribution.
Yeah, it's just building, integrating new assets, because every new asset has its own community. God, I love the XRP army. Sorry, I don't mean to kill you there. It's good reaction.
We're keeping that one in.
But for better or worse, they've always loved us because Ripple was one of our early investors. But you can argue if XRP is really a real blockchain, if it has a use case or any of those things. But what's very hard to argue is that it isn't a very high quality asset with a ton of liquidity and a strong user base, which is exactly what we're looking for.
Yeah.
So we just need to work with many companies like that, continue to expand out. But I mean, shoot, if we can just cover BTC, Binance, Ripple, and even Atom, or a few others, we cover most of crypto already. Yeah.
Do you think that's an issue though? That we have this concept, this economy of decentralizing everything, and yet we've got almost so much cryptocurrency centralized on exchanges and all the kind of authority that exchanges have. I mean, exchanges are in a situation where, if they let your project IEO on them, that kind of dictates, is your project going to be successful or not? We live in a world where if one exchange gets hacked, I mean, we saw what Mt. Gox did to the market back in 2014. Like, is this, is that a concern, or how do you feel we kind of get around that?
It's, of course, a concern because it centralizes power into a certain entity that can effectively king make whatever it wants. And it can inject itself in the middle and tax however it pleases because it controls all those users. But that's no different than Facebook or Twitter or anything else that we have. I think it's an unfortunate reality, but it is just a fairly normal sort of construct in human society to have something like that. If we had a bunch of users spread out everywhere and these exchanges had less power, the exchanges would also be worse distribution mechanisms. I'd have to work with many more to get the coverage I got with Binance.
True.
So there's always trade-offs. With that said, I think for next steps for us, we need to get listed in many other jurisdictions, places like Upit and Bithum in Korea. Binance doesn't have like the best coverage there. Work with other sort of jurisdictions like that where we can just really expand our distribution, but still work with just a small number of partners. But I mean, for us on the technical side, we just really care that some trading is happening, some good volatility is happening, so people are entertained and like they can actually make money in that market. It's not just sort of flatlining out. And then but on our security side, we want to make sure the bulk of our tokens are actually being staked. They're not on an exchange. But what's exciting actually coming in this year, a number of these businesses that we're working with are staking as a service providers. So one of our partners, Infinity Stones, is the official staking as a service provider for Poloniex.
Okay.
So what that means is anyone who holds Atom or Kava on Poloniex, they can trade that, but then still receive the staking rewards based on those assets. So I think that's like a really cool thing that we'll see coming to light. And then similarly on the wallet side, many of these wallets are also extending opportunities for people to hold it, whether it's custodial or non-custodial. If you have your assets there on the back end, there'll be some default staking as a service provider, which can stake your Tezos or whatever and provide you a return just on the assets that you're still like holding yourself.
Okay.
So those are two, I think, big trends that I'm really looking out for. And then just in sort of the landscape too is I'm very curious because the rewards structures are always different from blockchain to blockchain. But in the form factor of a wallet or an exchange, everything will just be presented to people as an interest rate. So it'll be weird and interesting to me to see how retail will look at that and sort of decipher. Will they just think, oh, it's just a interest rate, it's all the same for all these assets? Or will they actually sort of dig in and understand, oh, those rewards are structured very differently, or the security or the custody behind it is very different between different assets? All of that, I think, will start becoming more opaque. But what's the good part is retail will actually now be enabled to earn off of the assets from holding it that they can't currently do.
Mm-hmm. Brian, is there anything that you kind of wanted to touch on? I've kept you for a long time, and I'm very grateful for your time. Let people know where they can find out about Kava, where they can find out about you, and anything that you kind of want to let them know before we wrap this up.
Yeah, this has been really great. I've enjoyed all of the conversations. I love going deep. I love going all the way up to the macro. For us, we try to combine what's going on in blockchain with sort of the larger macro landscape all the time. And actually, an important thing for anybody who's even thinking about participating in the Kava landscape is, as a holder of Kava, you have a responsibility, if you're staking and voting on parameters of our system, to have good knowledge, make good financial decisions based on what assets we're supporting, what interest rates to do it, because we're operating as a central bank a decentralized central bank of crypto. So with good power comes, lots of responsibility, and I think that's the opportunity with Kava. It's exciting, but then there's also risk on the other side. Mm-hmm. But anyway, for people at home who want to learn more about Kava, you can go to kava.io, and then on Telegram, it's t.me/Kava Labs.
Great, man. Thank you so much for taking the time, Brian. I really appreciate it. It's been a great conversation.
Yeah, thank you, Justin.
And thank you so much for going over everything and getting kind of deep with me. I appreciate that, man.
Yeah, it's been really fun.
Looking forward to the next one.